A very good afternoon to everybody. So as promised, and finally we are here. Then we are here to finish, and we are here to start and do the entire questions. Okay, entire questions, as in as there is a restraint in the class with regard to the time. I explained all the concepts to you thoroughly, based on which I wanted all of you to try the questions. But it so happened that all of you had difficulties in the module 1 in certain chapters with the practical questions. So all of you found it really difficult to cope up with those particular practical questions. And so here I am with a new software, and I will be solving the offline sessions through this software. So it's a very easy software wherein all of you will also have the comfort of looking it and doing the questions. So as a part of this, as I've agreed to do it, so the first chapter that we will be taking up for today's class will be the inventories. Okay. So before I solve this practical question, my few tips for you will be, please all of you go through the earlier session, okay, on the inventories that I have taught on the various dates. So please go through the main lecture. Then you will get a concept of what are all the clarity or what are all the conceptual areas where you have to concentrate much. And in this class, purely it will be only to solve your practical questions. Okay. So I'm here to help you with the practical questions. As we know, in the inventories, we have solved, there are 11 illustrations, and we tried solving almost all the illustrations except for few illustrations in the beginning under the LIFO and the FIFO method. I've also told you, or I've given you a conceptual clarity as to how you have to go ahead with them. So I am here, and today I will be starting, or I will be I want to finish off the inventories first, okay, because this has been a long pending, and for few classes I have been telling you, okay, I will have to, or I will be solving it, but we were not able to do due to the time constraint. Now I'm here, I would like to start off with doing the inventories. So all of you, if you can look on to my screen, I'm just showing there are 5 practical questions to you in inventories, and the question number 2 and the question number 5, all of you, if you see the question number 2 and question number 5 are nothing but a repetition of your illustration number 7. So in the illustration number 7, the presentation that we followed will hold good. Okay, the presentation that we followed is, we put a trading account, and in the trading account on the debit side we put 2 opening stock, we put 2 purchases, we put 2 the manufacturing expenses. On the credit side we had sales, and we also had the closing stock. Okay, so these were the items we posted, and you have an adjustment with regard to the abnormal item, correct? You had an adjustment with regard to the abnormal item. When you look at your illustration or your question number 5, practical question number 5, the amount, everything is the same as your illustration number 7. So we are not going to go ahead with this. I want to show you, or I will be doing this particular illustration number 2. It's the same question, the same type of question, but there is only a difference in the presentation. The way in which the book or the practical solution is there, it has got a one particular way, and the way in which it has been solved, where in our presentation is slightly different, but you will definitely get the right answer. Clear, all of you? So now can we start understanding, and can we start doing this illustration number 2? We are going to just prepare the trading account. Okay, so please now look at the particular solution. So already this solution has been worked out, or I can just, if you want, okay. So if you want, I will just very quickly, I'm going to work out this particular problem. Okay, so we are going to show everything in the trading account. So can we go ahead with the question? Yes. So now we are going to prepare something called as, or the presentation for this as per our concept is preparation of the trading account. Correct, all of you? Yes. So we go ahead with the preparation of the trading account. The first item as per your question is nothing but the opening stock of 7 lakhs. So please put the opening stock. So you will be writing 2 opening stock on the credit side, which is 7 lakhs. Clear, all of you? Then what is the next item, all of you? Please see purchases during the period, 34 lakh and 60,000. So please post purchases also in your trading account under the debit side, which is 34 lakh and 60,000. Clear? Now the next one, it is nothing but the manufacturing expenses. So what are the manufacturing expenses? They come to 7 lakhs. So where will the manufacturing expenses come? In the trading account debit side. So please put to manufacturing expenses. Clear? How much it comes to? 7 lakhs. Good. Now what comes? Now there is sales. How much is the sales during the period? So it will be by sales 52 lakh and 20,000. Now we go ahead to read the question. At the time of valuing the closing stock, or at the time of valuing the stock on 31/3/2016. So this is nothing but your opening stock. What happened? A sum of 60,000 was written off a particular item which was originally purchased for 2 lakhs. So what is the meaning, ma? There was an item in the opening stock whose cost was 2 lakhs. But a sum of 60,000 was written off. So what will you find out? Revised cost. So 2 lakh minus 60,000. Come back to this. What is the revised cost of the abnormal item? You have an abnormal item. How will you find out the revised cost? Original cost minus the written down value. That is how you are going to do. So we go a bit this side. Okay. So we go here and now we try to understand what has happened. So what is your original cost, all of you? What is your original cost? We know that it is 2 lakhs given in the question, minus how much is the amount written off? 60,000. So 1 lakh and 40,000. What should you do with the 1 lakh 40,000? Subtract it from the opening stock because it is a abnormal item. So come back here. What are you supposed to do? It is not 7 lakhs, rather it is 7 lakh minus 1 lakh and 40,000. Correct? So what will be the actual opening stock? 5 lakh and 60,000. Whenever there is an abnormal item given to you in the question, what are you supposed to do? Find the revised cost, subtract it from the opening stock. The same way, what are we supposed to do? We have the sales given to us, correct? So the abnormal sales comes to how much? 1 lakh and 60,000. So what should you do with this? Deduct it from the original sales. So what will be, or how this amount will be changing? You will be showing it in the inner column of 52 lakh 20,000 less abnormal item, which is 1 lakh and 60,000. So it comes to 50 lakh and 60,000. Clear, all of you? Now finally what should you do? Find out the gross profit. What is the gross profit percentage? All of you read the question. The gross profit was 25% on the cost. What was it? 25% on the cost. I told you there is a formula to change. When the percentage is given as a percentage of cost, all of you please see, when the profit percentage, okay, when the profit percentage in the question is given as 25% of the cost. So it is nothing but 1/4 on the cost. Clear? Now, when you have to, or you have the sales value here, how will you convert it? 1 plus 4 plus 1. So 1/5 on the sales. Clear, all of you? 1/5 on the sales. So I am going to apply this gross profit of 1/5 on the 50 lakh and 60,000. So how much I get? 10 lakh and 12,000. How much is the value? 10 lakh and 12,000. Now please put the total. What is the balancing figure? It should be the closing stock. All of you clear? It should be the closing stock. Let us take the total 5 lakh 60 plus 34 lakh and 60,000 plus 7 lakh plus 10 lakh and 12,000, which is 57 lakh 32,000 is the total. Clear? 57 lakh 32,000 is the total, minus 50 lakh and 60,000, 6 lakh and 72,000. So this is our presentation, which actually is right. See the information or see the answer presentation in the textbook, all of you. Practical question number 2, 6 lakh and 72,000. So my dear students, you do it under any method, your concept is right. So whatever is being taught in the class, don't have an other or an iota of doubt. Everything is right. Clear? So now we are going to go ahead with the question number 3. All of you please look at your question number 3. Okay, so this is a peculiar question which is not there in your illustration. So I would like to solve this. So please read the question. The profit and loss account of Hanuman showed a net profit. So there is already a net profit arrived after considering the closing stock of 3,75,000 as of the 31st of March. Okay, good. Madam, already profit is given to me. Already stock is also given to me. Then what is the problem? Please read. Subsequently, the following information was obtained. That means the 5 transactions given to you, they have forgotten. They have omitted to take it. So what should you do? Revise the profit. What should you do? Each and individual transaction you should take. You should analyze the effect, whether this item is a purchase or is it a sales. Clear? So we will be starting, or we will be doing something called as revised profit and loss account. It is also called as profit and loss adjustment account. In that, the starting point is nothing but your profit given to you in the question, which is nothing but 6 lakh rupees. So that you put it on the credit side. Then each individual transaction you are going to read and then post it in that particular account in a way whether it will increase the profit or it will decrease the profit. That's all. As simple as that. There is no confusion, and it is going to be one of the most easiest questions. Okay. Can we start going ahead? Can we start doing the question? Okay. So, madam, what is the presentation I have to follow? My dear students, what is the presentation that you will have to be or you will have to do according to this particular question is this. Just give me a moment. Okay. So this is a new page that we have come to. So we will be going ahead and we will be doing it under this particular thing. So what is the point number 1? So we are doing the practical question number 3. All of you see practical question number 3. The presentation that is required is, okay, the presentation that is required is in the books of Hanuman, correct? So that is the name. So in the books of Hanuman, what are you going to prepare? You are going to prepare profit and loss adjustment account. Why are you preparing profit and loss adjustment account? Already there is profit given to you, but there are certain omissions. You now found out upon reading it that you forgot these particular transactions. Now you are going to read them. And the effect of this should be shown under the profit. Whether it will increase or it is going to decrease the profit, we are going to check it out. So you are preparing an account. Okay. So what is the format for the account? You have particulars, debit credit, particulars, amount in rupees, and then you have particulars, then you have the amount in rupees. All of you clear? Amount in rupees. Okay. So coming back to this, the starting point for this particular account will be your 6 lakhs. The 6 lakhs profit which is given to you will be the starting point. So which side will you be writing this particular 6 lakhs? You will be writing by existing net profit. What is the word you are using? By existing net profit. So how much is it? It is nothing but 6 lakh rupees. Clear all of you? It is 6 lakh rupees. Good. Now read the first point. Okay. Purchases for the year included. So already in the purchases you have included 15,000 rupees paid for the new electrical fittings for the shop. So what is this new electrical fittings? It is actually a part of your asset. So it is electrical fittings, furniture and fixtures, furniture and fittings. So it is a part of your furniture. But what did you do? You have by mistakenly added it to the profit. So earlier what did you do? 15,000 which was not profit, but you mistakenly added it to the you added it to the purchases. It is not your purchases, the 15,000. It is not purchase of goods, but it is a purchase of furniture. What did you do by mistake? You added it with the purchases, due to which your profit came down. Correct? Now you understood that it is not purchases. Oh my God, it is your fixed asset. So purchases should be reduced. That means what is the meaning? When purchase reduces, expense reduces, profit increases. Correct? So when this effect, the effect of this particular wrong purchases which is earlier debited, now you have to reverse it. So earlier you debited purchases, now you have to credit the wrong purchases. So what will you do? First entry will be by wrong debiting of electrical fittings. All of you clear? Electrical fittings. How much is the value? 15,000. Earlier I debited, now I am going to credit and I am going to tally. Good. So this is the effect of the first transaction. Next. Now please read. Hanuman gave away goods valued at 40,000 as free samples. Today only we have seen the free samples accounting, correct? When you give anything as free samples, what is the point? When you give anything as free samples, what is the entry passed? It will be advertisement account debtor to purchases. Correct? How much is the free samples, ma? 40,000 and 40,000. What is the effect? Can you tell me what is the effect of free samples? This purchases is credited. So the moment you see it is credited means purchases is reduced. Correct? Yes. So when you have the purchases reduced, you will write by free samples. That is, earlier you debited as purchases. Now you are going to reduce it from the purchases. So write 40,000. So this is the effect of crediting with purchases. But what about this advertisement? Advertisement is nothing but what? An expense to you, correct? So what will happen? Whenever an expense to be recorded, you will also write it as free samples within brackets advertisement. So 40,000. With regard to 40,000, if any goods are distributed as free samples, you will initially reduce it from purchases. Then in the P&L account, you will again debit it as an advertisement expense. So the net effect of both is that anything distributed as free samples, anything given as donations will not affect your profit. You should record both in the debit and credit side. Why in the credit side? Because from the purchases you should reduce. Earlier purchases debited, this amount was not reduced. Now reduce it, reduce the purchase. So what is the effect? It should be written on the credit side. The same effect, what happens? The moment you write it as free samples, advertisement will be debited in your P&L. So you should show that as expense, correct? Because ultimately you are talking about arriving at the correct profit. So the net profit is from P&L account. So in P&L account, this advertisement should have been debited. Now you are finding the mistake and you are debiting the 40,000. So with regard to the samples distribution as free samples alone, you have to both credit as well as you have to debit it. Clear? Now please read the next point. Invoices for goods amounting to 2,50,000 been entered on 27th March, but the goods were not included in stock. The moment you read this question, all of you will be having a doubt. Madam, is this sale or purchases? Whenever you have the particular word invoices for the goods amounting to, here in this case it is purchases. So what is the meaning? Invoices for the purchases, that means you have recorded already as purchases in your books on 27th of March. But did you receive the stock? No, you didn't receive the stock as of 31st of March. Then how can you show them as purchases? Wrongly already included as purchases now has to be reversed. What will you do for reversing? The same way on the credit side by stock not received. You have just invoiced. Only purchases invoice you have passed. You have put the purchases entry. Did you receive the stock? No. Then how can you record it as purchases? So now reverse it. How much are you going to reverse? 2,50,000. All of you clear with this particular point? Invoices of the goods amounting to means they are purchases. You put the bills, you recorded as purchases in your books, but ultimately later on what happened? The goods were not received. Once you don't have in the physical stock, you cannot include them as purchases. So now what did you do? You reversed the purchases. How did you reverse? By crediting it to the P&L adjustment. Clear? Okay. Now please see the next concept. In March 2016, the goods of 2 lakh were sold and delivered. That means you have sold the goods, goods have gone away, but they were taken in. How can you take it as sale in April, ma? You have already sold the goods and the inventory is sent out. So you should consider it to be the sale of which month? March month only, but wrongly what has happened? They have taken it to April. So what should you do? Now bring the sale. If you are bringing the sale, you have to credit the sales, correct? By sales of March, or if you please see, by sales of March, please credit 2 lakhs. Clear with this? Sales of March, please credit 2 lakhs. Good. Now we come to the last point. What is the last point? Goods costing 75,000 were sent on sale or return basis at a margin of profit of how much? 33.13 on the cost. Though approval was given in April, these were taken as sales of March. During the period of March, what has happened? you had goods sent on approval basis, correct? Goods sent on approval basis. Now we read about this a little later. So when you did this inventories question, definitely you would have had the doubts. Now let us clear the doubts. What is the cost of the goods sent, ma'am? It is 75,000 given to you in the question. Clear all of you? It is 75,000. Now please read the question. How much is the margin? It is 33 1 by 3 on cost. So when I say 33 1 by 3 on cost, 1/3 on cost, correct? So it is 1/3 on cost. So directly if you write that value, it will be 25,000. What is the sales value? It is 1 lakh rupees. All of you clear? Now what happened with this? As of 31st of March, there was no answer, no approval, no rejection. So what should you do? I have taught you, whenever you don't have that, first what are the two things that you should do? Reverse the sales, correct? At the selling price of 1 lakh. Then what should you do? Add with the closing stock. What should you do? Add with the closing stock. So this add with the closing stock at which price? At the cost of 75,000. All of you clear? Any doubts with this? What should you do? First, reverse the sales. Reverse the sales means where will it come here? All of you please see, where will it come in your profit and loss adjustment? Reversing the sales should be debited to sale on approval basis. So you are reversing the sale at which value? At 1 lakh, correct? Now you are adding it with the closing stock. So closing stock should be which side? It will be on the credit side by closing stock on approval basis. How much it comes to? Cost. Very, very important is cost. So you have to consider it at 75,000. Now that you have posted all the 5 entries, you have finished posted all the 5 entries. They are asking you to find out the net adjusted net profit for the year ended. Clear all of you? What will be the adjusted net profit? Your credit side is more. Your credit side comes to, how much is the credit side coming to? Your credit side comes to 11 lakh and 80,000. This side also 11 lakh and 80,000. And what will be your adjusted profit? All of you please see, 11 lakh 80,000 to adjusted net profit will be 10 lakh and 40,000. All of you please see, adjusted net profit will be 10 lakh and 40,000 after posting all these entries. Clear to all of you? Now the next question that is asked is, after finding out all of this, please find out the value of the closing stock they are asking. All of you please see, valuation of the closing stock as of which date, ma? As of 31st of March 2016. So they are asking you to do this. So you know originally what is the cost, correct? So what is the original cost? Original cost of the inventory. All of you please read the question. Original cost of the inventory is nothing but what is given to you in the question. Now with this, what are you supposed to do? With this, what are you supposed to do? You are supposed to do 2 adjustments. What are they? All of you please see. First thing is, the closing stock, this should be added. What is that? Closing stock should be added. So all of you please see, you have to add the goods sent on the approval basis, correct? So physically though you are taking the goods inside, okay, but in the form of books. Here what is important is, madam, whether you have to arrive the closing stock based on the book value or the physical stock value, it is the book value. In the book value earlier, you arrived at 3,75,000, but that was before adding the stock received from the goods on approval basis, correct? So add that now. Point number 2, you also have to add, even though physically the stock is not come purchases, you included it as purchases, correct? So now what should you do? Included it as purchases means your inventory would have been reduced. Now since you are not considering them as purchases, what should you do? You have to add back the stock of the goods not received. Correct? How much that comes to? 2,50,000, which is your purchases. So the total value of the revised closing stock after putting the adjustments is nothing but 7 lakhs. All of you clear? So this is what is being done in your textbook also. Clear all of you? Do you have any doubts? Obviously this is not a live session, so you can't ask me doubts. Listen to the recordings 2 to 3 times, you will be able to understand. So this is with regard to the, which question? To the practical question number 3. Now we very quickly go to the practical question number 4. Okay. So now coming back, physical verification of stock in a business was done on 23rd June. The value of the stock as of 23rd June was 48 lakhs. The following transactions took place between 23rd June to 30th of June. Clear all of you? Now, from the 23rd June, you have to arrive the value as of 30th of June. So, what should you do during this period? You have to add the purchases. You have to deduct the value of the sales. Cost of sales is important. How do we arrive at the cost of sales? Take the total sales. If there are any returns, subtract it. On the net sales, you apply the profit percentage, find the profit and subtract it. That's all. Add purchases, subtract the sales. This is the mantra before you start the particular question. Now we go ahead. There are only 4 transactions given to you, but there will be a confusion with regard to the transactions. So what are you supposed to do? Please see how we are going to present it. All of you clear? We go to the practical question number 4. So statement, what is this? You will be writing statement showing the computation of the closing stock or the stock valuation as on 30th of June 2016. Clear all of you? So you will be starting, you will be having particulars and the amount column. All of you clear? So you will be starting with the value. All of you please see. You will be starting with the value of the inventory as of which date? As on 23rd June. Correct? What is given to you? 48 lakhs. This is the question given to you. Now let us read further. Out of the goods sent on consignment, all of you please read, goods worth 2,40,000 has not been sold. If it is not sold, what should you do? You have to add it with your physical stock. So what is the first point that you will be doing? Unsold consignment stock. Unsold consignment stock will be added. How much is the value? Please write it in the inner column. 2,40,000. All of you clear? Now please read the next point, ma. Purchases of rupees 4 lakhs were made, out of which goods worth 1,60,000 were delivered on July 5th. What is the meaning? Total purchases, okay, were made. For how much value? 4 lakhs. But how much is received in the period? How much is received in the period? It is only 2,40,000. How much is received? Only 2,40,000. How, madam, 2,40,000? I told you purchases should be added. Correct? How much you will add? I will only add what is received. So 4 lakh minus 1,60,000, which is not received within 30th of June, I will deduct it. So what is the value of the purchases you have to add? It is 2,40,000. Clear with this? With this, you can definitely not have any doubts. Clear? Now we go to the most important adjustment. What is the important adjustment? Sales were 13 lakh and 60,000. Okay. So sales are how much, ma? 13 lakh and 60,000. Now what is happening to your sales? Sales 13 lakh 60,000, which to be subtracted. Correct? cost of sales to be subtracted. Now read it further. 3,20,000 has been sent on approval basis. So how much ma? 3,20,000 sent on approval basis. Okay. Half of these goods were returned before 30th June. So what is half of 3,20,000? Half of 3,20,000 is 1,60,000. When the goods are sent on approval basis, they returned back to you. So what are you supposed to do? Add it with your stock. Returns on sale on approval basis. Correct? So what is the sale? What is the returns? It is nothing but 3,20,000 into 50%. 1,60,000. You have to add it with the stock because it is being returned. Clear? Now read what happened to the other half. But no information is available regarding the remaining goods. So what is happening, ma? All of you please see, with the remaining 1,60,000, there is no information available to you. So what should you do? How should you compute that? Reverse it from the sales and add it with the closing stock. Correct? Did we understand that? Now you are going to add the cost of the goods sent on approval. You can get a doubt here, madam. You have taken 1,60,000 here because they have returned. The moment you say returned, take the entire value, no? Over. Remaining goods which are still lying with the customer, no approval has been given yet. So you don't know if he'll approve or not. Only for that kind of stock, reverse from the sales, and you have to, what should you do? You have to take it and show it at the cost. What is the cost? 1,60,000 is the half, correct? So to find out the cost, please read the question. The goods are sold at cost plus 25%. So what is this? This is the sale value. How will you apply it? Go to the working note. What is the working note that you will have to do? My dear students, you can see the profit percentage is nothing but 25% on the cost. It is nothing but 1/4 on the cost. If it is 1/4 on the cost, I told you it will be 1/5 on the sales value. Correct? So now I am going to apply 1/5 here. 1,60,000 divided by 1/5 is 32,000. So if you subtract 1,60,000 minus 32,000, 1,28,000 will be added. All of you clear? You have to add back 1,28,000. This is added at the particular or respective sale value. Technically, I will tell you one more thing. The presentation in your book is given at 1,60,000 here. Instead, what you can do is you can subtract it below also. Clear, all of you? So now coming back to your particular point, this particular value, what is the total addition? Then it comes to 7,68,000. So this is 55,68,000. Now the only thing that you have to subtract is the cost of the sales. All of you, what should you subtract, ma? Cost of the sales. So for this, there is a small working note that is being done. Clear? There is a small working note that is being done. All of you please see. In the fourth point, there is one more thing. However, goods costing 2,40,000 has been sold for how much? 1,20,000. So there is a abnormal item, correct? So whenever you have an abnormal item, go to the calculation of normal sales. First you find out the calculation of normal sales. What is this calculation of normal sales, ma? It is nothing but what is the actual sales given to you in the question. Actual sales is 13,60,000. Out of this, first you have to less the abnormal sales. Abnormal sales is 1,20,000. Then you have to reverse the return on the approval. Return of goods sent on approval. How much it comes to? 1,60,000. Clear, all of you? So if you are going to subtract, what is the value that you will be getting? The value that you will be getting is 10,80,000. So this is the normal sales, correct? This is the normal sales. Now when you calculate the gross profit on the normal sales, all of you please see, gross profit you are going to calculate it on the normal sales. What is the percentage, ma? It is nothing but 20% on the sales value, correct? 20 percentage on the sales value. You know the normal sales is 10 lakh 80. So the normal gross profit comes to 20 percentage into 10 lakh and 80,000. So how much it comes to? 2 lakh and 16,000. All of you clear till this? Any doubts till this? Now please see, there is one abnormal item, correct? If usually abnormal item was given to you in the question 2, what did you do, all of you? The abnormal item, the cost was subtracted from the opening stock and the sale value you subtracted from the total sales. Here in this question, it is not a trading account, but it is a different question wherein you are finding the value of the closing stock. In that case, what should you do? The adjustment of the abnormal loss, which is nothing but value 2,40,000 sold for 1,20,000, correct? So what has happened? There is a loss which is to the extent of 1,20,000. This will be subtracted from your total normal profit. So this is one thing that you have to understand. So when you talk about gross profit, it is nothing but after the abnormal loss, what is the profit? What is that? After the abnormal loss, what is the profit? So now we go back to the original presentation. This cost of sales, what is this cost of sales? It is the sale value minus the gross profit. You know the gross profit is 96,000. You have to subtract this 96,000 from the sale. Okay. So how much is the total sale given to you, all of you? Sales is nothing but total sale 13 lakh and 60,000 minus 1 lakh and 60,000, which is the returns. All of you please see, there is one thing that I have to tell you here. This is not the actual sales, okay? Coming back to this point, they are nothing but the goods in transit. So please see what is the meaning of this particular thing. Total value of purchases is 4 lakhs. Out of which 1,60,000 has not been received up till the particular month, correct? But you are recorded it already as purchases in your books. So the remaining goods in transit also should be shown here. Clear? The 1,60,000 is not on account of return. It is on goods on transit for the above purchases. Clear? So the sales value which is returned will be subtracted here. Clear? So the actual sales will be 12 lakhs minus what is the gross profit value which you have arrived after considering the abnormal loss. It is 96,000. So what is the actual value? 11 lakh and 4,000. This should be subtracted. So 55 lakh and 68,000 minus 11 lakh and 4,000. 44 lakh and 64,000 is the value. All of you, please listen. This is a peculiar question wherein you are finding out the value of the closing stock from the 23rd to 30th. So add purchases and subtract the sales. Okay. So the first one, unsold consignment stock will be added. It will be added at the normal value. Don't bother whether it is cost or at the sales value. Next, when you are talking about purchases, in this question, purchases already invoices has been entered in the books. But physical stock, when did it come? It came on 5th. But since already you have added the purchases, you have to consider it in two parts. What are the two parts? Goods received, goods still in transit. So this 2,40,000 and 1,60,000 pertains to the purchases only. Clear? The next entry is with regard to what? Goods sent on approval basis. 1,60,000 which is returned should be subtracted from the sales here, and the remaining part for which there is no answer, you should add it with the closing stock at the cost. To find out the closing stock at the cost, you have to go for this formula. In the question, you have 25% of the cost is the profit. 1/4 on the cost means it will be 1/5 on sales. So remove the 1/5 and you will get the profit as 32,000. 1,28,000 is the cost. So add it. But madam, what is this? From sales you subtracted 1,60,000. That is correct. But how did you get 96,000? My dear students, this is a little different from the earlier question. In this question, you have an abnormal item. So what should you do? Show the effect of the abnormal item in the gross profit itself. So find out the normal gross profit. Then you have to subtract the loss, which is 1,20,000. So this will be the gross profit which will be considered here. Clear? It will be considered here as subtraction. So the 11 lakh and 4,000 is the cost of the sale you have to subtract. So with this we arrive at the value of the stock as of 30th of June 2016. That's all. So this is your practical questions with regard to the inventory. Clear all of you? I solved 3 questions. So with this we complete the inventory. So we will be now going ahead with the chapter bank reconciliation statement. So earlier, whatever is the chapter and the main notes that you have already seen, I want all of you to please open that, okay, and have a very good understanding of the subject, okay, of that particular chapter. Now I will be going ahead and I will be working out the 2 illustrations, illustration number 8 and illustration number 9, which I didn't have time to work out in the main class, okay. But I request you, my sincere request to all of you will be, first you have to go through the main lectures that I have taken already, and then you will have to sit to understand this particular lecture, okay. So coming back to the thing. We are now going to look at the bank reconciliation statement. So the bank reconciliation statement, we will be going ahead first with the illustration number 8. So what is this illustration number 8, madam? So illustration number 8 is nothing but preparation of an adjusted cash book. So what is this preparation of an adjusted cash book? I have earlier explained the concept to you, correct? So coming back to this, I have earlier explained the concept of an adjusted cash book, wherein during the end or after preparation of the trial balance, you already would have obtained the cash balance. But it would so happen that the cash balance obtained is after due to, or it is due to certain errors to you. So it is your duty to revise the cash balance by preparing an adjusted cash book, and you have to take that cash balance for preparing your BRS. Okay. Now, what are the entries, madam, which will come into the adjusted cash book? Only 2 type of entries will come in the adjusted cash book. First one, any mistake which is made in the cash book, like omissions, wrong side postings, like twice postings, all these are mistakes that have happened in the cash book. If such kind of things are going to come, you have to post them first in the adjusted cash book. Point number 2, where there are any omissions in the, or where there are any omissions in the cash book. What do you mean by omissions? Any transactions that happen directly to the through the bank. Bank is paying something, and as per your standing instruction, bank is paying some amount. Bank customer deposits directly in the bank. Bank is charging the interest, bank is crediting the interest. All these transactions you will not come to know, or you would not have recorded in your cash book until you get the bank statement, correct? So now our problem here is to identify these 2 type of transactions from the illustration, or from the whatever is the amounts or whatever is the things given to us, and we are going to prepare an adjusted cash book first, and then we are going to go ahead with the BRS. Now in this particular illustrations, you have the cash book of Mr. Gadbadwala shows a particular balance, and if you read that, it does not agree with the passbook. That is why you have to do BRS. Now when you find that on the scrutiny of it, the following transactions have been revealed. Now see, do you have after the 7th transaction, there is nothing called as required to, correct? In your illustration number 5 and 6, they have clearly given prepare an adjusted cash book and then do BRS. Clear? But in this kind of a particular question, the question is silent. But in your exam, definitely they will give you. So all of you started asking me queries, madam, whether should we solve it under adjusted cash book method, or is it a normal problem, madam? Then I told them, or I answered them, you try it under adjusted cash book, because that concept is only new to you. Let us try it under adjusted cash book. Okay. So now we are going to do the illustration number 8. In the books of whom? In the books of Mr. Gadbadwala. You are going to prepare the adjusted cash book. So what is the starting point of an adjusted cash book account, ma? It is what is your normal balance. That will be your particular starting point. All of you clear? What are the entries that will come here? Any mistakes in the cash book and any omissions. Whatever happens directly in the bank, you have to put it in the adjusted cash book only. Then what will go to the BRS, madam? Only checks issued but not presented. Checks deposited but not cleared. And if any mistake is made by the bank, then that kind of a transaction will come here. Where will it come? It will come into your particular BRS. But otherwise, apart from that, everything else will go into your adjusted cash book. Okay. Now, let us read the point number 1. All of you see point number. Okay. Let us read the point number 1. What is the point number 1? Gadbadwala shows 8,34,000 balance at the bank. So, cash book shows a favorable balance. Favorable means debit balance. So, here you have 2 balance brought down. How much is the balance brought down? 8,36,400. Clear all of you? So, you have written the balance on the debit side because it is a favorable balance. Now, let us read the transaction. What is the first transaction? On 15th of December 2017, the payment side of the cash book. What do you mean by the payment side? Payment side means credit side, correct? So, credit side is undercast by 10,000. What is the meaning? The credit side is less by the 10,000. Now, you have to again credit that particular amount, correct? To rectify it, what should you do? Credit it. That means increase the credit balance. So, it will be by wrong casting. So, the first entry of the 10,000 should be credited. Why, madam? Credit side is less. To make it equal or to make it increase it, to rectify the mistake, you have to credit the 10,000. Clear all of you? Yes. Now, please see, a check for 1,31,000 issued. Issued means it should have been recorded on the credit side of the bank column, but it was taken which side? Cash side. So, what should you do? You have to write by checks issued but not recorded, correct? So, you didn't record it on the bank column, you recorded it in the cash column. But your bank, in your bank column, you should have recorded on the credit side. So, now record it, okay? So, the mistake now you are making good. Next point, one deposit of 1,50,000 received was recorded in the cash column. The same thing, beforehand you made a payment but put it in the cash column. So, now I credited. Now, you received. When the moment you say received or deposited, where should you do? What should you do? You have to debit it to checks deposited but wrongly taken into cash column. Where have you taken it? Wrongly taken into cash column. Correct? How much is this value? How much is the value? 1,50,000. Clear? So, we have posted the 3 entries. Now, see the 4th one. Very important. On 18th December, debit balance of 15,260. While turning the page, you brought forward it as credit balance. So, what happened? Debit changed into credit. What type of mistake? Posting on the wrong side of the account. Actually, you should have debited. Correct? But you credited by mistake. So, to rectify the mistake, what will you do now? You have to debit it to wrong. All of you please see, to wrong balance brought forward. Correct? So, how much is the actual value? Please see, 15,260, but there is a mistake on the opposite side, or if the debit is brought as credit and credit is bought as debit, to rectify it in the rectification of errors, what did I tell you? Multiply it by 2. So, 15,260 multiplied by 2 should be debited now. Correct? To rectify the mistake, you will take twice the value. Why, madam, twice the value? Instead of putting it on the debit side, he put it on the credit side. So, first you have to nullify the credit. So, 115,260 to be debited so that credit gets set off. Now, what should you originally do? Now, 15,000 originally you should have debited. So, 2 times you have to debit 15,260. Clear all of you? Now read the fifth point. Of the total checks amounting to 11,514, checks aggregating were encashed in December. So the point is what? They were encashed. So out of the total checks, this much amount, that means these are the checks issued, but out of which only some amount is encashed, some amount is encashed afterwards. So this is a BRS item. It will not come in your adjusted cash book. Clear? Now please read the next point. Dividend of 25,000 collected by the bank and subscription of 1,000 paid by the bank were not noted. So this is omission. This omission should be now posted into your adjusted cash book. Correct? So any receipt, please debit the receipt. What is the receipt? To dividend collected by the bank. Correct? It is a receipt which is 25,000 by subscriptions paid by the bank. Whenever anything is happening in the bank passbook and you don't know, it is an omission. The moment you get information about it, please post it in the adjusted cash book, not in the BRS. All of you clear? Now read the last point. One outgoing check was recorded twice. That means what? Only one time you should have credited. You credited by mistake 2 times on the payment side. That means you credited it twice. So to rectify it, now you have to debit it to wrong posting twice. How much is the value? 3,50,000. So everything else, out of the 7 entries, 6 entries are coming in the adjusted cash book only. Only 1 entry you have to do BRS. Very, very easy. Now what should you do? Please balance it. So when you balance, you find that your debit side is more. So what is the balance? 13,91,920. Same way this side, 13,91,920 minus this particular credit side. So the balance carried down, which is the balancing figure, will be what? 12,49,920. So this is the value you have arrived from the adjusted cash book. Madam, using this value, what should I do? Very, very simple, my dear students. You have to prepare the bank reconciliation statement. What is this particular meaning? Bank reconciliation statement is nothing but I start with the balance as per which book? Cash book. From the adjusted cash book, I got the revised balance, which is favorable balance. Now all of you, please see, if closing balance is coming on the credit side, if you bring it to the opposite side, it will be debit side. So it is a favorable balance. So how much is the balance, ma? 12,49,920. The moment you see the word favorable, where should your aim be? Your aim is in the opposite book. So it will be the pass book. Clear? So in this, there is only one transaction. What transaction you have? Of the total checks amounting 11,514, checks aggregating to 7,815 were encashed in December. Correct? So 11,514 minus 7,815, the remaining checks were not encashed. So it is checks issued but not encashed. The moment you say check issued, cash book will be less. Since your aim is in the passbook, what should you do? Add. So please see, in the presentation I am going to add the checks issued but not presented. How much is the value I have to consider? It is 11,000. All of you please see, it is 11,514. Out of that, 7,815 has been realized. So the remaining unrealized amount is how much, ma? 3,699. So now if you add that with this, your balance, favorable balance as per passbook will be 12,53,619. So this is what? Balance as per passbook. All of you clear? This is nothing but balance as per your passbook. So with this problem we have solved by taking or doing an adjusted cash book, and then we have arrived at the value. Clear? Now we are going to do the illustration number 9. So this illustration number 9 is not like your other illustrations wherein you are given both. You have the cash book that is the bank column of the cash book given to you. Also you have the passbook given to you, but please check the dates. This particular cash book is being given for the period of March. So if you can see, months of March is given for the cash book, correct? So during the month of March you have the cash book, but during the month of April you have the passbook. So madam, how do I go about with this particular question? It is very simple. All of you please see, you have to first understand the crux of why you are doing a bank reconciliation statement. So the crux is nothing but this month I have or I prepared a cash book, but the checks that I deposited or checks that I issued have not been tallied, or I have not encashed, or I have not presented the same day. I was not able to do it. Okay, so then what I decided or what I did was, okay, it didn't come, then I took my bank passbook or my bank statement and then I started checking. Clear? Now what you have to do, or the steps to solve this illustration number 9 is the most easiest. How will you solve it? Please see the steps. First thing, compare your debit side of the cash book with the credit side of the passbook. What you should do? Compare the debit side of the cash book with the credit side of the passbook. Both of them should match. Technically, if it is the same month, then it should match. Correct? But now we are looking at cash book in the month of March, passbook in the month of April. So those entries which are there in the March and which have come in April, that means what? These particular items should have been come in March itself, but they didn't happen that way. They took time and they were realized, or they were actually credited or debited in your bank passbook at a later date. So you should first compare the debit of the cash book, credit of the passbook, and then identify what are the items which came at a later stage. Now let us understand through the example. All of you please read. When you look at the debit side of your cash book, you have balance brought down. It's okay, leave it. Sales account, which is cash sales or the bank sales, that also not required. So how many names you have? Ram, you have Singhal, you have Goyal, you have Patel. Correct? Now go to the passbook. On the credit side, you have balance brought down. That also you can ignore. Goyal, Patel, correct? And Usha, Kalpana. Now Usha and Kalpana are not appearing in your cash book, so there is no problem. Now Goyal and Patel are appearing. Who are there in your cash book are also there in your passbook. Meaning what? All of you please see. The moment you received check from Goyal and Patel, you received on 25th of March, 31st of March. You deposited them, let us assume, on 25th and 31st. But the bank took time and your checks were credited in your account when? Please read here. On 3rd of April and 5th of April. So what happened? Literally during March, these two entries or these two check deposited, but they were not cleared. So this was an item of BRS during your March month. Clear with that? So madam, how do I start with the balance? Which balance will I take? Since we are finding out for the month of March, you have to consider the closing cash balance. It is nothing but what? All of you please check here. 3,30,000 was the cash balance as of 31st of March. Correct? Now what is the opening balance? Please see here. In the passbook on 1st of April, another balance is there which is nothing but 3,65,000. So the reason for the differences between 3,13,000 and 3,65,000 you have to arrive. Clear? Now what are we going to do? We are going to do the bank reconciliation statement. So in the books of, who is this person? Who is this gentleman in the books of whom? Books of Jane. You have the bank reconciliation statement. So here it is not directly given in this illustration number 9. You are supposed to compare two different books, your cash book and the passbook. And here there is one more adjustment or one more litigation. What is that? Both the books are not on the same months. One book is there for March, other book is there for April. So what should you make out of this? You should understand which is the balance you are going to start. Now you are going to start balance as per the cash book. This is nothing but the closing balance as of March. Correct? and you are going to prepare this particular statement as of March only. So you start with the amount 3,13,000, correct? And now you identified that the check deposited but not cleared. Whose and whose it is not cleared, ma? Goyal 33,000, Patel 65,000. So they are checks deposited but not cleared. The moment you see balance, it is nothing but the favorable balance. So where should your aim be? Should be in the opposite book. If you start with cash book, your aim should be in the pass book. So check deposited but not cleared. What is the meaning or what is the effect? The moment I say check deposited, cash book will be more, pass book will be less. Since your aim is in the pass book, you have to subtract the checks deposited but not cleared, correct? Whose and whose checks are deposited but not cleared in March? Goyal 33,000. All of you please see, Goyal 33,000 and Mr. Patel, who is 65,000. So how much it comes to? 98,000 total check deposited. Now what should you do? Compare the credit side of the cash book with the debit side of the passbook. Now please see the credit side, ma. You have Modi, you have Patel, you have Suresh, you have Ramesh, correct? So now please check the debit side. When you check the debit side, you have only two Ramesh. That's all. What is that you have? Only Ramesh, 1,50,000 is there. So Modi, Patel, Suresh have been cleared. That means check issued and the amount also has been debited in March itself. So they are not causes for difference. Who is the cause for difference? Only Ramesh check which was issued in March, but it was only debited in April. Correct, all of you? So Ramesh of 1,50,000 check issued. The moment check issued, cash book reduces, passbook is more. Your aim is in the passbook, so add. Add what, ma? Checks issued but not presented. How much? Only one person, Mr. Ramesh, and his check is 1,50,000. Now what is the balance that you get? 3,13,000 plus 1,50,000 minus 3,13,000 plus 1,50,000 minus 98,000. 3,65,000 is the balance as per passbook. As of which date? 31st of March 17. So please see, all of you. What is that you have got? 3,65,000. So this is how you are going to solve this question. It is a different question wherein you have to compare both the books. Now you can ask me, madam, here it is given in March and in April. What if in the exam they say or give both the particular books for the same period? Then what should you do? Tell me. What is there on the debit side of the cash book should be completely matching with the credit side. If you find that a particular check which is deposited is not appearing in the passbook of the same month, then that will be the reason for difference. Different months means you should have something in common. If same months means if this item is not there here, then that not there item will become the BRS item. The not there item will become what, ma? BRS item. Clear? Now that we have finished the BRS illustration number 8 and illustration number 9, in the class I worked out the remaining illustrations and I had also orally explained to you how to do with regard to the the other illustrations. So we had technically worked out, and the other illustrations are simple. Illustration 7 and 6 only was your homework, only 2 homeworks, and they are also pretty much easy. Now we come to the practical questions. In the practical questions you have 4 questions, okay, in which I was already, or I told you, for the question number 3 alone, all of you please see, for the question number 3 alone, if you look at the presentation, okay, for the question number 3 alone, if you look at the particular presentation, you have what? You have a favorable balance that is being arrived to you in the particular statement. So this is a normal question that we are having. So the problem or the thing is, I want all of you to start trying it. Only if you try, you will get to understand whether a question is difficult or it is not difficult, correct? Since I had solved the illustration number 8, and I also know and feel that the question number number 2, which is your practical question, is also preparation of your adjusted cash book. Okay, I will very orally do this particular question and I want all of you to try it. Clear all of you? Since the question number 2 might come in your exam because it is a adjusted cash book and BRS. Till now what we were seeing. Okay. So now coming back, all of you please see. According to the cash book of Gopi, there was a balance of 44,50,000 in his bank on 30th of June 2017. Okay, so the bank balance is a positive balance, which is 44,50,000. On investigation, you find this. Okay, see, first required, you have to always read, make the appropriate adjustments in the cash book. Even in the exam, you will be asked to prepare cash book separately if it is given in the question. Okay, and then see, prepare a BRS. So, out of the 7 items, you should know which will go to the adjusted cash book and which will be coming to the BRS statement or the bank reconciliation statement. All of you please see, checks amounting to 6 lakh rupees issued to the creditors but not presented. Check issued but not presented will go into the BRS. It will not come in the adjusted cash book. Point number 1. Point number 2. Checks paid. I told you paid means deposited. Check deposited into the bank amounting to 11 lakh and 5,000, out of which checks amounting to 5,50,000 only were collected. That means what? Out of 11 lakh and 5,000 total deposits made, only 5,50,000 was being or you were able to collect it. What is the remaining? 11 lakh 5,000 minus 5,50,000. 5,55,000 are the checks deposited but not cleared. Clear? It is the difference between 11,05,000 and 5,50,000. That is the amount of check deposited but not clear. This is also a BRS item. Don't bring it in your adjusted cash book. Now see. All of you please see, dividend of 40,000 and rent amounting to 66 lakhs received by the bank and entered only in the passbook. So it is a omission. So you should take it to the adjusted cash book. Since both are receipts, you should show this on which side? You should show this on the debit side of the adjusted cash book. So in the adjusted cash book, you will start with the balance. Whether it is a debit balance, credit balance, it is a debit balance of how much ma? 44,50,000. So in the adjusted cash book debit side, 44,50,000. Then you received dividend. So dividend received, debit side 40,000. Rent received, how much? 6 lakhs. So it will be amount received. So you will write rent received 6 lakhs. These are omissions only entered in the passbook. Now you have to enter it in the cash book. Clear? Now, please read the 4th point. Insurance premium paid by the banks, 27,000 not entered in the cash book. So what happened? This is also a transaction pertaining only to the bank. Now you found out. So enter it now. Payment means what? You have to credit by insurance premium paid 27,000 where? In your adjusted cash book. Clear? Now please see, payment side of the cash book has been undercasted. This was similar to your illustration number 8. Your credit side is less. Now credit it further. So on the credit side, by undercasting error, you will write 5,000. Clear? Good. Bank charges of 1,500 shown in the passbook has not been entered in the cash book. So it is a omission. Bank charges, so credit by bank charges in the adjusted cash book to the extent of 1,500. Clear all of you? Now please see, a bill payable of 2 lakh had been paid by the bank. Okay, that means what? There is a bill payable of 2 lakh rupees which is paid by the bank. It is not recorded in your cash book. Now record it. What should you do? Credit. Payable means payment. So credit your cash book by bills payable. How much is the value? 2 lakh rupees is the value. Clear all of you? It is 2 lakh rupees credited. Now see, bills receivable discounted with the bank 60,000 at a cost of 1,000. That means what? Bills receivable collected by the bank. But how much? 60,000 are no. Cost 1,000 rupees you have to give. So 59,000 is the receipt. You have to debit it in your adjusted cash book. So to the Bills receivable, it is nothing but 59,000, 60,000 minus 1,000 rupees. Is that clear, all of you? Now you have prepared your, all of you please see, let us look into the solution also. You have put everything required and the final balance is your 49 lakhs 15,500. So you are putting this particular balance, which is the debit balance, favorable. You start from cash book. If favorable, your aim should be in the passbook. So as per passbook, checks issued should be added, checks deposited should be subtracted. So these are the two values that was there and it was taken here, and this is the value balance as per the bank passbook. All of you clear? Any doubts with this? So this is the only question which we feel or which you feel it is very difficult. Other questions are preparing a normal BRS. You start with the balance of the any one thing and you arrive at the other balances. Now can we do only practical question number 1? Shall I tell you orally? And I want you to try the question number 3 and 4. It is definitely very easy. Don't at all bother yourself. Clear? Okay. Please see the first point. On 31st December, cash book showed a balance of 60,000. So you are going to start the BRS from which balance? Favorable balance as per the cash book, which is 60,000. The moment I say favorable balance, where should your aim be? Your aim should be in the passbook. All of you, where the aim should be? It should be in the passbook. And how the transactions are going to behave? If due to the transactions, if passbook is more, add. If due to the transactions, passbook is less, subtract. Clear? Now let us go to the first point. Checks have been issued for 15 lakhs, out of which 4 lakhs were presented for payment. So not presented for payment is how much? 15 lakh minus 4 lakh, 11 lakh is check issued but not presented. Since your aim is in the passbook, the moment I say check issued, which balance will be lesser? Check issued, your cash book balance will be less, passbook will be more. So check issued of 11 lakhs should be added. Clear? Next. Checks worth 11,40,000 were deposited but not been credited. So check deposited means cash book is more, passbook is less. So subtract 11,40,000 immediately. Now read. In addition to this, another check of 5 lakh was also entered in the cash book, but it was banked on 3rd of January. Same thing. Another check also deposited, but in December it was not encashed. It was only received in January. So this is also a check deposited for the amount 5 lakhs. Moment check deposited, cash book is more, passbook is less. So since passbook is less and your aim is in the passbook, please subtract this 5 lakhs. Clear? Now, a check received from Susan was deposited in the bank on 26th, but it was dishonored. The moment you see dishonored, which book is less? It is always the passbook is less. The moment dishonor, what happens? You will debit your passbook. The passbook balance reduces. So your aim is in the passbook. Subtract this 4 lakhs. What should you do? You have to deduct this 4 lakhs immediately. Check dishonored means passbook is less, cash book is more. So subtract the amount. Good. Now what is the next point? Passbook showed a bank charges of 2,000 debited by the bank. When bank deducts the charges, your passbook is less, cash book is more. Aim is in the passbook. So subtract this 2,000. Clear? Subtract this 2,000. Then read the last one. One of the debtors deposited a sum of 5 lakhs in the bank account directly. When any amount is deposited directly, what happens, ma? The bank passbook balance increases. So what should you do? Add the passbook. Clear? You should add the passbook. Add it with the passbook balance. So if you do everything like this, you will definitely get the 3,82,000. Clear? Now this is nothing but a credit balance is given to you. What is the meaning? Balance as per passbook. Actually, in your question, all of you please see in the presentation, ma. Minus 3,82,000. That means what? What has happened? The balance, debit balance, favorable balance as per cash book you started, but you got minus. So it became unfavorable. So this credit is a mistake. Bank balance, which is debit balance as per passbook, is the answer. Bank balance, which is the debit balance, is the answer. Is this clear? So I have explained the practical question number 1, practical question number 2 also. I want all of you to try 3 and 4. So this marks the completion of your inventories, practical questions 3 and BRS 2 illustrations plus 2 practical questions I have solved. So this is final and these 2 chapters are over. Thank you, my dear students.